If you owe the IRS and you've received a final notice of intent to levy, you're probably asking the wrong question. The issue isn't, will they take something? The real question is, how much can they take and when will they take it? Because the IRS doesn't treat your paycheck and your bank account the same. One has protections and limits. The other has zero protections and no limits. Today, I'm breaking all of that down in detail so you can actually understand the rules that the IRS uses, the loopholes people miss, and how you can push back before the real damage happens. What's up, guys? Corey Hankerson here from Legacy Tax, and they call me the Levy King because I've helped hundreds of clients with back taxes, tax liens, unfiled returns, and that's right, IRS levies. If the IRS took your check, the Levy King will get it back. 1-877-LEVY-KING, LevyKing.com. I'm also the author of End the Tax Nightmare, Insider Secrets to Beat the IRS and Reduce Your Tax Debt. Inside the book, I'll show you how to stop IRS levies, liens, and garnishments without paying the tax in full. How to set up the payment plan you want, not the one they want you to have. And how to potentially settle your tax debt for less than you actually owe. My book has been a top seller on Amazon for years. You can buy it right now for $19.99, but I want to give you a copy of the book for free. Just go over to www.endthetaxnightmare.com, enter your name and email, and we'll send you a copy at no charge, not even shipping, totally free. Before we continue with the content, please take a moment to subscribe to my channel. Hit that like button so you'll get a heads up each and every time we drop a new video. All right, guys, let's dive into today's content. Today, I'm breaking down exactly how much the IRS can take in a bank levy and a wage levy. And I'm going to point out the actual rules they use, the Internal Revenue Manual for bank levies and Publication 1494 for wage levy. So stay to the end, because once you know these limits, I'll show you exactly how to push back and maybe even get that levy released entirely. Let's start with the big question. How much can they take from your paycheck? And how much can they take from your bank account? Because the answer is very different depending on the type of levy. When the IRS hits your paycheck, they can't just take 100% of it. There are actually legal limits. Those limits are laid out in IRS Publication 1494. That's the document your employer is supposed to use to figure out how much of your paycheck is exempt from levy. Publication 1494 is updated every year. It's based on several factors, such as your filing status. Are you single, married filing joint, married filing separate, whatever? How many dependents do you claim? And how often are you paid? Is it weekly, biweekly, monthly, etc.? So here's how it works in plain English. Like I said, when your employer receives a notice of levy, they'll also receive Publication 1494. And it's going to include something called a Statement of Dependence and Filing Status. This document is supposed to be given to you, and you are supposed to complete it and return it to your employer within 3 business days. Publication 1494 also has a table that says, okay, for this person, this much of their pay is exempt from levy. Everything you make above that exempt amount is withheld and sent to the IRS each pay period. Let's walk through this with a simple example. Let's say you make $2,000 every 2 weeks and you're single with no dependents. Publication 1494 lists $576.92 as your exemption amount. That's the minimum that you're allowed to keep every 2 weeks. So you keep $576.92 and the IRS gets $1,423.08. If your paycheck is lower than that number, the IRS might not be able to take anything from you. If your paycheck is higher, they can take the difference. For example, if you actually made $3,000 every 2 weeks instead of $2,000 every 2 weeks, you'd still only keep $576.92. But the IRS would now get $2,423.08. Your exemption amount is the same, but the more you make, the more they keep. If you're married with kids, that exemption number goes up a little bit because the government assumes you have more mouths to feed and you are justified for having higher living expenses. Here's where people get burned. If you don't return the form your employer gives you, or you don't tell them your correct filing status and number of dependents, the IRS assumes the worst for you. Usually they're going to assume single with 0 dependents. That's going to keep your exemption amount as low as possible and lets them take more. So if your wages are being hit, You want to ask your payroll department, what did you use for my filing status and dependents? You want to pull up Publication 1494 for the current year and make sure they're using the right line and the right pay period, weekly, biweekly, etc. Then you also want to make sure that you've completed the statement of dependents and filing status. If they're using the wrong info, you may be allowing the IRS to take more than they're legally allowed to take. Now let's talk about the other option in the IRS tool belt, the bank levy. When the IRS levies your bank account, they're following rules in the Internal Revenue Manual, specifically the levy sections in IRM 5.11.4, which includes the procedures for bank levies and bank levy releases. Now, here's the ugly truth. A bank levy does not work like a wage levy. With wages, the IRS has to leave you that exempt amount from Publication 1494. They have to leave that with you every pay period. But with a bank levy, there's no nice little table that says you get to keep this much. If the IRS sends your bank a levy for, the IRS is normally going to send your bank a levy for the full balance you owe. The bank is then instructed to freeze whatever is in the account up to the amount of the tax debt. So if you owe $15,000 and you've got $20,000 in your checking account, they can freeze the whole $15,000. On the other hand, if you owe $15,000 but you only have $3,000 in the bank, then they're going to take the entire $3,000. They're going to freeze it and hold it. Under the Internal Revenue Manual, once that levy hits, the bank has to freeze the funds on the date that they receive the levy. They have to hold those funds for 21 days. If the IRS doesn't send a levy release to the bank has to send that money to the IRS after that 21-day period. So that 21-day period is actually critical. That's your window to call the IRS or get someone like me involved to request a levy released or modification. The Internal Revenue Manual also says that the IRS is supposed to consider economic hardship when deciding to release or modify a levy. So if taking that money means that you can't pay basic living expenses like rent, utilities, food, medical, you can make a hardship argument and request that the levy be released or at least reduced or modified. But if you do nothing, after 21 days, that frozen money goes straight to the IRS. So in simple terms, a wage levy is limited by the exemption rules in Publication 1494, and it's going to be taken from every single paycheck continuously until the levy is released. A bank levy, on the other hand, they can grab up to everything in that account on that day only. It's not continuous. It's just on that one day, up to the amount that you owe. And that's not going to be governed by Publication 1494. Instead, it's governed by Internal Revenue Manual Section 5.11.4. So if you're watching this video and you're thinking, Corey, that's exactly what's happening to me, don't wait. Here's your game plan right now. So the first thing you want to do is figure out, is this a wage levy or a bank levy, or God forbid, both? Number two, you want to ask your employer for the levy paperwork. Check your exempt amount using a current version of Publication 1494. You want to make sure they're using the right filing status and the number of dependents. Number three, if it is a bank levy, you want to call the bank and ask, what date did you receive this levy from the IRS? You want to count 21 days from that date, and that's your deadline. You want to gather proof of your necessary living expenses so you can document hardship if needed. Then you want to get help. But here's the other thing about a levy. A levy is just a symptom of the underlying problem, which is the tax debt itself. My team and I do this every single day. We talk to the IRS using the same playbook that they're using, the Internal Revenue Manual and Publication 1494. And we push back when they're taking too much or creating a financial hardship. But, and hear me when I say this, if you don't address the actual tax debt, it's just a matter of time before the IRS comes knocking all over again. Speaking of tax debt, I want you to know that there are special programs in place to help you get a fresh start. But how do you know if you qualify? No two cases are exactly alike. So how do you know exactly how much you can settle for? Well, I've created a free tool to help you get qualified for a fresh start. Just head over to www.levyking.com or click the link below, follow the prompts, answer a few simple questions, and we'll help you figure out your eligibility. Their website again is www.levyking.com, or you can give us a call at 1-877 Levy King. That's 1-877-538-9546. Well, that's it for this week. Talk to you later. Bye.
1-877-LEVY-KING, Levy Levy King, 1-877-LEVY-KING, LevyKing.com.
Owe back taxes to the IRS? Call the Levy King. He's the best. 877-LEVY-KING, LevyKing.com.
1-877-LEVY-KING, LevyKing.com.